The encirclement is tightening. This is a tremendous deal, believe me.
Hey there, everyone. Welcome to this week's edition of Bulls versus Bears. 33 kilometres of pure inflation. The Strait of Hormuz has sent shockwaves. 20% of the world's oil goes through that one little 33-kilometre narrow stretch there, which is, despite, it's all what anyone seems to actually care about. There's not really too much about bombing Iran or anyone being killed or etc. But Jonathan, a special mention to yourself. You've been tracking this. Well, both Venezuela, like you are Mr. Geopolitics, I've got to say. You've nailed both in the first 2 months of this year.
Well, the head. I mean, welcome everybody, and thanks for tuning in. But I did see a headline on as I was walking past the main area, and apparently this has been in plan since November last year. So, you just watch. It's all about. We have a good. How can we say a good signal to noise ratio? So we kind of figure out what is actually important versus what is not, and U.S. military, big ships moving about, actual dollars being deployed, actual physical equipment. There's a lot of Twitter accounts that follow those huge pieces of equipment around, and it's no surprise that if you deploy a lot of military around an area, they're going to attack. So here we are.
It wasn't just a lot; it was literally the largest concentration of U.S. military outside of the last war. And also, shout out to K.AI, Mr. SaaS software, because as we're going to see later on, despite all the turmoil this week in equity markets, the only green on the screen was, what was it? SaaS, baby.
That's SaaS is back. I'm going to have to say, my God, I couldn't really believe it. I thought coming into Monday, because obviously the thing happened on the weekend. I was like at dinner, I'm going, oh my God, Iran's attacked. This is going to be crazy. Same with a couple of trader friends of mine, and they mentioned, and it was like, oh my God, Monday's going to open up crazy. It was actually pretty tamed. I'm very surprised. Very surprised.
Mate, pretty tame. I mean, look. To be honest, I'm genuinely impressed that the market's only down as much as it is, but overall, but as you'll see in a chart later on, and we will get to it because I wanted to save the best till last. Because look, I'm not lobbying for bonus points, but I did go bearish but bullish software. Nailed it.
Yes.
But no, there's no bonus points. Don't even ask. So we're gonna basically stay on point here. So we've got a really lovely animated version of this, which I would love to get some of these things going. But you can go to the website. We'll put the link in the comments, or if you can see it on Mosaic actually, and click on the link there.
So you need HTML on Canva now, is it? To make this animated?
Kai and I have already had a discussion about this today, and I'm still confused. So, so this is just, look, green line, okay, green and blue line's good, no line's bad. And this little cluster here is 40 tankers in a port at Abu Dhabi. Which I've got to say, probably not the best strategic move. You talk about making yourself a target, and then these dudes are the yellows, the tankers, but the reds, that's the warships. But we're talking about 2 to 4 tankers daily transiting, or as I like to call it, running the gauntlet. But as opposed to 40 plus per day normally, and I was like, well, Trump's got 55 million barrels from Venezuela. They do 1 million a day, yada, yada, yada. Surely that'll make up the slack. Just to give you some context, if you combined 55 million barrels he's already acquired for the Venezuelan people, allegedly, the further 50 million they've got there, plus the million a day, it makes up for 4 days of the Hormuz Strait only. So that's where there's an article on Mosaic as well this week. So every 10 days is roughly about 1% CPI inflationary.
Ooh.
So, but everyone's going, oh, it's transitory. Trump's done a bit of a George W. Bush and gone, mission accomplished, like in day 2. But the general consensus from the generals and from, well, I can't, the administration, it's too hard because they're just mixed messages, is 4 weeks at best. So if you need to fill up your car, probably do it soon and take a jerry can with you, because by week 4, it's gonna. Or what's the price lock-in app on 7-Eleven?
Oh yes, that's great. You mentioned
maybe that's
that.
a very smart consumer move. You know, like we're not just stockbrokers here. We're trying to save you money everywhere.
My little story on that is that so back when that app first started, I was one of those guys that used to geo lock my my apps to get the cheap petrol in certain parts of Sydney.
You would manually set yourself to like Adelaide or something, wouldn't you? Where it was the
Exactly
cheapest
right.
price in
Exactly
Australia.
right.
Yeah, they fixed that loophole.
They fixed that loophole, so the maximum discount is now 25 cents, which is pretty much that takes that arbitrage out.
But I've got to say that's good hustle.
Yeah.
I don't know whether it's. I don't know. Is it fraud?
Oh, there was some guy on Reddit, and he was all about like, okay, this is how you like, because you had to geo block your phone, and like if you had an Apple, like it was very very hard to actually spoof the location of your phone.
Hang on. We need to get back on track here. But anyway, fill up your car. That's an interesting story, but I think for one moment there we forgot we were on a podcast. By the hair of your chinny chin chin, thank God we weren't on the Nasdaq, JT. 0.06.
Jesus.
I wrote in the chat.
A win's a win, though. A win's a win.
Oh, man, a win's a win. It might be Golden Point, but it's still there. But on Tuesday, I'm like, is it wrong that I'm happy that me and you are going to beat Kai this week? And like at that stage, I'm thinking we were just home, and I woke up this morning, and I'm walking into the office going, oh crap, we're in trouble here. But the KOSPI's the big story this week. So
I'll give a bit of light in terms of the KOSPI, because like some of the moves that we're seeing out of Korea is just insane, right? Because like we look overnight and you go, oh my god, KOSPI's gone down 11% or 8% in a day, gone up like 10%.
No. It was 8%, then 12%, and then it rallied 10% the next day.
Correct, exactly. And it's just so everyone knows, in Korea, the biggest company is Samsung. They basically do memory chips, right? I'm sure everyone's had a Samsung hard disk or whatever. So in the last year or so, most of these memory chip companies have had a spectacular run. Samsung is no different. They had a spectacular run. However, they are an absolute massive portion of the KOSPI index. So that's why, I think it was, when were we looking at it in the last 2 months?
So Kai, the number you're looking for is 40%.
Correct. Yes.
Samsung and SK Hynix, they're 40% of the KOSPI.
Both memory chip. Yeah.
Both memory chip, both leaders in their department, and that's why basically we talk about the Mag 7 concentration, and we talk about CBA and the bank's concentration here. Yeah, that's pretty much playing second fiddle to the concentration in the KOSPI.
Correct.
And not to mention it's the largest retail options market in the world. So when it does those, those massive moves and volatility blows out, it just gets like it doesn't have a down 3.5% day. It either has a down 7% day or a down 2% day. It never settles in between. And look, I was just working in the background there. So that's a yearly chart, right? So it's rallied, and then it's gone. So, and the only reason it stopped here was they shut the market. The circuit breaker officially went off. This day they shut the market here, and then because it's like when you give your kid a timeout. It's like go and stand in the corner and have a think about what you've done. Basically, that's what the but they do reopen it if it happens early enough. And then they reopened it, and then it went bang again, and then hit the limit again. It was down 12.5 that day, and then just so that'd be like, what would that be in the SPY? That would be like the SPY going from 9,100 back to dropping 1,800 points.
Yeah.
Essentially back to 7,200 where we were at the low in April, and then coming halfway back again in 3 days.
Yeah,
3 days.
Yeah, it's insane. And shout out to all the crypto traders in Korea, because I know you guys are prop guys, but remember there was a kimchi arbitrage in Bitcoin back in the day, probably like 5 or 6 years ago. Like basically, there was a premium in Bitcoin prices in Korea. So it just shows that these guys are just mad punters there. Like, we like to talk ourselves up in Australia that we like to punt, but yeah, like compared to Korea, I don't think we can.
We like punting on sport. We're not. I think we're pretty risk averse as an investing nation. But yeah. So and look, context here. We went into this time last week. We were going, oh, maybe someone, maybe they're going to invade. So if you'd have said, "Where's gold?" If they invade, where's gold next week? I'm pretty sure you're not saying Northern Star's down 11%, or the gold sector is generally being down, or the Newmont down. That you would have picked for sure. In fact, that's actually pretty right. That's pretty piss weak, to be honest. That deserves better, because oil's up like 28% this week, and 80% in the last 12 months, and these guys are still lingering around like a bad smell. I think Ampol opened on Monday down significantly, and then it's recovered over the week. But our old little friends over here, though, REA, Wise Tech, Technology One, Life 360 got belted. But if you have a look at the 5 pillars map, and you followed that structure, it's pretty much. And where's Pro Medicus? Where's their little? It's come home with a wet sale today. Is up 10% today.
Yeah, absolutely.
But they're 4 of the top 6 performers on the day. Were part of our structured investment. So for those of you listening and don't have a video, I'm curling my mo right now in great satisfaction that we struck earlier in the week, which did feel like a little bit of insanity at the time, but it actually panned out. But that's pretty like.
You know what that actually feels like, Mark? It actually feels like, remember when April last year, when you're like, we need to buy the index here, and I was just like, are you serious? We do? And,
that morning, no, but that's specifically why I put the line on the chart, is because I know that on the day I'm not gonna. I'm everything in every bone of my body is going to be like, what are you doing? But then in hindsight, you go, oh my God, that was so obvious. So we always drum that into clients, right? Like pre-plan, stick to your levels. But I felt so crook that morning. I was like, yep, no, we're definitely going to do it. Internally, I was not. I was nowhere near that.
And I was the same. And I was just like, oh, are we really? I was like, yeah, I guess that was the plan before. Let's just execute. And that's the same with this with the SaaS. And it's just like, oh, we're in the middle of pretty much World War III, or whatever you want to call it.
Well, whatever you want to call it, yeah.
But the SaaS names held up. And
they were down 55 to 60% as it was. So
yeah, absolutely.
That is often where you got to see the forest for the trees sometimes. But I mean, because I was watching it really closely, and because we were looking to strike, and we delayed striking because we had the campaign closed the week before, and we just rang everyone and just went, yeah, no, probably not a great idea. And so I've been specifically probably over watching those basket of stocks every morning. So get up, I'm at the bus stop at 5 o'clock in the morning, and I'm like, oh, look, so everything's up. And then I'd go switch to the index page and go, oh, right, okay. So there was, very definitely it was counter to the price action, of the general market. And we're overall, though, there's some, whilst it's come back against the index, I think we go, well, there's the US, and as well, look, that's the market map there. It's the most green market map there. And everything else is as you would largely expect, and probably a lot greener than I would have thought. The last 7 sessions, that software ETF's up 13%, the Nasdaq's flat, basically. So, but if you put it in context of the broader move since October, it's still going to make up 29% on the index to come back to where it was versus the others. So there's still 30%, potentially 30% to go. So yeah, it's not whilst it probably feels like that looks like a big move because of the time frame of the chart. But as you can see here, like ServiceNow, the cybersecurity firms have led the way. Like CrowdStrike's up 16.
Wow.
And I still don't really know what Apple Oven does, but I don't know.
You mean McLovin?
McLovin, yeah. They just Life 360 that was a wild day. Maiden profit or something, or had 100 million. Was up 10% in the morning and ended up down 18% on the day. It scored better than we thought on the 5 pillars, but I'm calling it the SaaSpocalypse narrative is gone.
Yeah, but
so
well done, guards. Like that was a great call. What I wanted to add to that is that I do think that it'll be kind of like the reverse of the gold and silver trade, meaning that once everyone else is kind of on that bandwagon and the SaaS, because we're early, and that's generally how it is. Early-ish, but as soon as the mainstream starts drumming in that, basically these companies are going to rule the world again, and that'll be the time to actually get out, because generally the narrative right now is so negative that we're getting some great entry points here, and I think that narrative, while in our little sort of echo chamber, it's gone positive. I still think there's a lot of general negativity out there, and once that turns positive, and we start seeing, SaaS is alive again, and it's going to eat the market.
Well, SaaS is alive again. Is the I think that's the difference is that I think we were just as guilty of blanketly buying SaaS companies as the market is as guilty of blanketly selling them.
Yeah, absolutely.
And now we're really just not touching anything even the elevated threat area. But so just as a thing, so we're going to webinar this. So I'm going to interview Kai this Thursday, next Wednesday for this interview, because while I've been doing a lot of work on this, I've been annoying the absolute crap out of him and basically just going, are you sure? Am I not? Am I doing it right? Am I doing it right? And then I'm wandering into TV going, oh yeah, I know what I'm talking about, and I don't. So I've learned a lot this week, but this 5-pillar mode framework was very much Mr. Chen, and look, that's what everyone's got this opinion. Everyone's got these opinions on AI, like the Roger Montgomerys of the world and things like that, where I swear to God, he's basically saying AI is overhyped for 3 years straight, and his one central source is a robotics expert that came up with the Roomba, which is the robotic vacuum cleaner. And then so there's Elon Musk and Jensen, who have revolutionized AI, fully self-driving cars, but some 7-year-old professor from MIT that did a robotic vacuum's like, he's your guy. But he goes on to TV so certain all the time, like, it's over. It's been, look, I said it was a bubble once, and you know what? I put my hand up and went, I'm wrong. Like,
you know where it came about, all this, right? Like I went to actually one of the university founder events. One of my old friends, she came out from San Francisco. She works at Meta. And I asked her the question. I'm like, look, I know you're in Silicon Valley, so obviously this AI thing's impacted you guys a lot as well. Like, are there many startups that are killing it? Building these unicorn companies? She's like, mate, I honestly have not seen one AI built app, AI built app that's killed it and become a unicorn yet, right? And she's like a venture capitalist in Silicon Valley. But it got me thinking. Me and her are going a bit back and forth. And it's like, look, at the end of the day, it's a business model, right? Like, these companies have a purpose to serve. The only way they make money is if they're actually a good business, right? The app is there because it solves a problem for customers, and it will always be that way, regardless of whatever new things come out. And that's how the moat came about. And it's like, basically, look, let's go back to basics. How does this company actually have a competitive edge on the market? And that's, really what it boils down to. So,
well, and I'm going to have to stop you there, Kai, because otherwise you're going to spoil.
No,
you're going
to
spoil the webinar. But that's on Wednesday. Free to register. Finn's been pretty epic on the social media this week. So if you can't find the link to it, God knows you're definitely not following us anywhere. But look, if you scan this code here, you can actually sign up at this page as well. But this is one of the things. As you hover over these, it will actually give you company by company what's score out of 10 and how it fits into the pillar framework. There's now 70 stocks on there, and it's not just SaaS stocks anymore. I did a fair bit of ASX focus and added to it, as we revealed last week. Ironically, Claude's enabled me to be able to do these things because I can't code, and they are pretty cool. But it's just a really cool. But like, if I was to give you 70 company reports, that everyone would just look at it and throw it in the bin. But if you can just go and find your stock and hover, and we'll add to it over time. But I added 25. It was 20 of the highest threats on the ASX, whether they be software or not, and then I added 10 positive ones as well, and then a few more US ones. We had a recommendation on Bentley Systems this week, which I'd never heard of until, and then it came up on your screener, JT,
it was on that map and had a Petrovsky score of 9. And
9 out of 9. Right?
Yeah, exactly.
Which is about as financially stable as you get.
Need to put that in.
So look, and this we're gonna keep maintaining it as a living, that living sort of document, because technology will change. And we are big users of AI, and we're big fans of it. And Kai, obviously, we wouldn't be able to be without Kai, being at the forefront and obviously building our app Mosaic from scratch. Basically, we sacked our developers, so we're very aware. We're very aware that we're, that you can.
This is first-hand experience.
Absolutely first-hand. And look, it saved me my blood pressure. You taking over the project, but we've lived it, and so that's where we were. I guess why we were very much. But this is probably some of the better quality work we've done. And then the price. I didn't think the price would come our way as as conveniently, as quickly as what. But we'll take it, right? Like. But I still think there's work to be done, because there's some things like Zero, for instance, or Life 360. I've never been a fan of, because you could already do what they do on Google and Facebook, but that in the end that actually ended up being Life 360's positive, is that that essentially it's nothing to do with the technology. Because the technology's always been there. It's obviously how they've marketed it and how they've got users and etc., and how they're going to expand on it. So, and I think things like Hub24, for instance, or the investment platforms, while they'll be fine for the next few years, there'd be a fair bit of software nipping at heels because there's a lot of money in it. And then like something like computer share, for instance, like registries were already under threat from tokenization, from blockchain, etc. I think this just makes it worse. But yeah, you can scan that code and go to the page, and you can filter and do all sorts of stuff. And we'll probably add some more stocks maybe next week. But like basically, apart from oil,
is that Chuck?
No, that's not right.
Yeah,
that's an error from me.
I don't think silver was up 14% for the week.
Maybe it was just me hoping.
It'll be oil for sure. I did this before,
oil
so
coal.
I was 20.
Yeah, oil and coal are the standouts this week.
Well,
oil
it's
was up, I think, about 22%.
Drum roll, please. Boom.
There you go.
Yeah, there you go.
Oil and coal.
23% for crude.
And Bitcoin.
I felt like a game show host then. It was a big reveal. Silver down 7%, not up 14. That could have been terrible.
I don't get it. Why is coal up and then uranium down? What's the? Oh, is it?
Well, one is used right now for power.
Yeah.
So everyone's worried about the Straits of Hormuz. So they're like, get me as much coal as I can just to keep the lights going.
True.
Yeah, uranium is fine, but unless you've actually got, unless you're France or Japan that actually have working nuclear reactors, it's useless. So people are stockpiling coal. People are stockpiling oil. That's all it is.
More of a it's the instant effect, isn't it? Like, and because everyone just assumes these things are going to be transitory. I would reckon that those critical minerals is maybe not a bad buying opportunity. I wouldn't have thought. If it is going to be transitory, I think you would want to be short. As a spread, you'd be short crude, long critical minerals for sure, and short coal, long critical minerals.
Because I think where it would keep back up again is once they reshift focus back to China and Asia, right? So I think it's obviously the China-US stuff's been getting a bit of a break. Obviously in the Middle East, that's the main flashpoint at the moment. But I do think the long-term shift for the US is definitely in Asia Pacific. So I think once that picks back up again, we should see a good spike in critical
China
minerals.
had some poor economic numbers this week, but it's pretty hard when Trump's making a ridiculous statement every 3 seconds. And look, I mean, this has been a bit of a short one, only because we're humble and we didn't want to brag for too long. But also, JT and MG, I'm off the bottom of the barrel. Still coming last, but Kai, you're now 6 from 8.
Oh, pretty thin margin, boys. I'd say. I'm not sure. It was pretty close.
But again, it's like like
this
a percent.
Yeah, it's been like this for pretty much the whole year. Pretty much
it
the
feels
S&P
like the most panicky week. But like, you're looking at the US market. If you looked at a chart and you didn't have a news feed, you'd be like, I'll stay on holidays.
And just to note, because as Mark was saying, I've gamified the whole thing. Basically, I was just going opposite Kai.
Oh yes,
we now have a new procedure. So
we have a new procedure, and this is only because I've got a lot of children. This is not what I've got to do at home all the time, and now I'm going to deal with you pair of idiots. Whoever cuts, the other one has to choose. There's a rule. So now we're submitting. We're having to submit, which possibly gives me a bit of an unfair advantage. But actually no. It hasn't, because I put it in there for next week. So, JT, Wool, and Kai is bear. So, and look, I think if any, I know that there's a few people who'd listened, and we've had a big jump in subscribers actually. And if you do listen to us, please actually subscribe, because apparently that really helps us. So I got a little lesson on
So that's why
from Claude about
so that's why we
don't
have to entice the people. Please like and subscribe.
Yeah, please like and subscribe, which I think is so
It's
grim.
so bad, but we have to do
It's
it.
so bad, but please like and subscribe. Yeah, so we're on all the platforms. Oh God, I feel ashamed of myself right now. But yeah, so we for bonus points, I'm happy for suggestions to come in from the viewers as to what if for the particular week, if there's a good idea about a prediction for bonus points, well, we're open to that. So I'm looking at you, Shane Davis. I'm pretty sure you'll have a suggestion. You fire one in, mate. And on Twitter, a Sly Dark Horse as well. There's a few of you out there to throw a few comments. There was a request for Kramer of the Week this week. I was just going to singly give it to Roger Montgomery, but then as I dug deep, because of the world's worst investment thesis on robotics and AI, and until I realised he had partners in crime, which is most of the financial partners in Australia. The one that came off best was Junbei Liu. When I analysed it, she liked WiseTech, but she liked it for all the wrong reasons, according to Claude. So, but she came out on top. But pretty much, some of the fund managers in Australia, and I won't be naming names necessarily because I don't want to make too many enemies all at once. But yeah, no, there's some pretty terrible investment theses out there based on some very, very thin understanding of AI. And which, look, if we didn't have K.AI working at MPC, I probably could have been one of them, but thankfully we've got you here to keep us straight. But but yeah, so the Kramer of the Week just generally goes to the Australian financial markets AI investment thesis because there's plenty of them that said sell, get out. They're all gonna die last week, and didn't we bounce? So yeah, so we got fear and greed as well, I would imagine, or maybe I didn't put that slide in, but
No, that was the previous slide.
Was it previous slide? Of course, yeah. So 30,
there it is.
That's not that bad. 34.
Yeah, considering that we're in the middle of pretty much World War, whatever you want to call it. Yeah, only a 34. I do want to note that on one of my Twitter feeds that the put volume is at extreme levels at the moment. A lot of put buying this week, and that means that the market's probably going to bounce. just from what I've seen.
Oh, okay.
Yeah, like everyone's kind of ready.
Bullish.
Yeah, well, look, everyone's kind of ready for this market to roll over, and I was worried about it last night. But yeah, and I might have sneaked a peek at Kai's homework and saw that he was bearish, and I thought I'd go the other way.
Bastard!
I actually did not. But as I said, like, it was just more. I saw record amounts of put buying, so the markets just don't reward that. I'm genuinely surprised how well it survived this week. Yeah, absolutely.
And I just kind of and I'm like, I mean, there's climbing the wall of worry, and then there's like how much it's held up this week is borderline irresponsible.
Crazy. I honestly couldn't believe it. Like, I mean, like, if on Saturday when it first started happening, you said that it would only be down 1%, I'd be saying you're crazy. Like, I would have thought at least 4 or 5% move. But
that's pretty normal. And don't forget, we've had inflationary numbers all week as well. We've got payrolls tonight as well. And we've had, like, if we get a strong payrolls, rate cuts are genuinely off the table. And we're bond traders are now pricing out any rate cut at all this year. We're only a 40% rate cut of even getting 40% chance of even getting one at all.
I really think
we
that's
were pricing in 3.
I really think that's the scariest story. Like, to be honest, in the medium term, that's really concerning because I think, if it is prolonged and this conflict goes on for more than a month, Jesus, like that calls on the bond market. It's very, very worrying. That's very concerning.
Bond yields were up this week as well. So I just think that the market is there's too much for the market to look at, and it's clinging onto the positive because that's what it's done forever. But like, you know, they're like, it's running out of positive doors to go down. Like, there's no positive door left, because you've got you've got no rate cuts coming. You've got inflation, and then you've got a president who is literally begging for rate cuts and doing everything he can in the global economy and the global geopolitics to completely bugger that up. Like, and
don't forget, he just mentioned that he's going to use the futures market to drive the price of oil down lower.
Dear.
He obviously doesn't understand the mechanics of the markets there.
Oh dear.
I'm pretty sure there's a couple of oil traders that just wander up and go, "Hold my beer, mate."
Exactly.
That's a silly thing to do. I mean, although I think, I like I said before, I'd be short gold, oil and coal and long the critical minerals probably long term, but
that's a
dipping my
trade.
toe in the water.
Oh my God, that's a trade to front run, right? Like that's just a target on your back. Like, oh my God, you put that in the market, the market will come back at you and say, hey, all right, how much you got? Let's go.
They're like, it's a paper trading. It's the joy of being an advisor, and why I came back to this side of the desk is I enjoy sleep and seeing my family and stuff like that, and not having to wake up because wake up in the middle of the night 5 times a night. But that pretty much wraps it up, boys. It's been an interesting week.
Yeah, absolutely.
I highly recommend you go to Mosaic because there's been about 4 or 5 really decent articles this week. More context on the Strait of Hormuz. And there's some stats around how long moves in gold and oil and things. So everyone's really surprised about these gold and oil moves. But like, if you look at the last 4 major events, they're pretty bang on. In fact, they're probably just a little bit quicker. Obviously the SaaS map's updated, and then go and register for the webinar. Kai and I will see you guys Wednesday, but otherwise we'll catch everyone next week.
Yeah, thanks for tuning in.
See ya. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.